Pinterest reported quarterly financial results after the stock markets closed on November 7th, 2024, that are sending the stock price down by more than 16% on the day after the results. Of course, I'm disappointed with these results as I've had Pinterest stock rated as a buy all year long in 2024. It's now down more than 20% year to date in 2024. Not one of my better recommendations so far. But where am I rating the stock following these results? I'll answer that question in this video. I'll let you know if I'm bringing the stock down, if I'm decreasing the rating, or if I'm keeping it rated as a buy. I'll also review the latest financial results and the big picture items that Pinterest stock investors need to know from the latest earnings release. So let's take a look. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, Pinterest CEO saying that they delivered another strong quarter with users reaching another all-time high of 537 million and revenue growth at 18%. Continues on to say, our AI investments are driving results, powering better personalized experiences and greater performance for advertisers. So let me address the first part. The company grew monthly active users very nicely in the most recent quarter and better than one of its rivals, Snap, in the most recent quarter. And I'll share with you the specific reason why I say Pinterest user growth was better than Snap. I'll share that with you a little bit later in the video, so stay tuned for that part. Revenue growth of 18% was among the best out of all the major ad-supported companies. If you look at Meta platforms, Alphabet, Snap, and the advertising segment for Amazon, 18-19% was on the higher end of the results from all of those companies. So Pinterest hitting the mark there in terms of getting the best out of the most recent quarter revenue growth. It did not underperform its peers in this regard. And then with the artificial intelligence investments, these are working really well for social media companies, for companies that utilize any kind of recommender system like Pinterest does. It's been working well because they're able to surface content that users are more likely to engage with, and they're getting better at that. And so that makes users spend more time on the platform, which then creates more opportunities to show advertisements. And that's working well across the board, whether you look at Alphabet, whether you look at Amazon, whether you look at Meta or Snap, those AI investments are working well. On the other side of the equation too, because they're making it easier for marketers to find their customers. Marketers love to find prospects that are highly qualified, meaning they're very likely to be customers. Marketers are not very interested in showing advertisements to people that are not likely to use their products at any point in time. So these have helped both sides of the equation, and it's working well across the board. And perhaps more impressively, the 18% revenue growth for Pinterest helped increase net profitability by more than or roughly 5x from 6.7 million in the same quarter last year up to 30 million in the most recent quarter, for a net profit margin of 3% compared to a net profit margin of 1% in the same quarter last year. So one of the more critical metrics to look at when you're evaluating social media companies like Pinterest, Meta platforms, or Snapchat is the monthly active or daily active user growth. And for Pinterest, they experienced solid growth here, 11% year-over-year growth, or 55 million users increased year-over-year to 537 million. But more impressively, they added 3 million monthly active users from the US and Canada. That's an increase of 3%. The reason why this is more important is because if you look at the average revenue per user, those from the US and Canada command much higher average revenues per user than in any other part of the world. And you can see $7.31 average revenue per user. And look at in the rest of the world segment, where they only generate 14 cents per active user. and they have 300 million users in that region where they get like 50 times less average revenue compared to the user in US and Canada. And the reason for this phenomena is because the people in the US and Canada have greater purchasing power, more money to spend. And so marketers are willing to pay more to influence the decisions of people that have more money to spend. And so they're willing to spend more. And the reason why this was impressive for Pinterest, because Snap hasn't increased their monthly active or daily active users in the US and Canada for several quarters now. The market is primarily saturated, right? In the US and Canada, you're not getting that many new users that have not had a social media account with you before. It's hard to find growth in these saturated markets, but Pinterest is finding growth here, and that's impressive. Looking ahead, in the fourth quarter, the company is forecasting revenue in the range of $1.135 billion, which would represent 16% growth year over year. Now, that would be a deceleration from the 18% growth it just reported, but I think 16% growth is solid. I would be pleased with this forecast if I was a Pinterest stock investor. I don't own shares. I only recommend shares. I would be happy with this forecast if I was a shareholder. I think this is a robust forecast for Pinterest, for any of these social media companies to grow revenue at this rate. If they can sustain this, it's an excellent growth rate. If you look at cash flow from operations, Pinterest more than doubled in the last 9 months that ended September 30th, 2024. Their cash flow from operations doubled to $711 million, up from $355 million in the same time last year. So across the board, everything I look at looks good for Pinterest, and yet the stock price is down more than 16% on the day following the announcement. If I had to make an estimate of why the stock price is down, the only downside I see here is from the forecast. The forecast could be less than what investors were expecting, and perhaps that disappointment has depressed the stock price. But again, let me share with you the monthly active user growth from the previous quarter. We already saw the numbers year over year, but if we look at the numbers from the previous quarter, they increased by 15 million, the monthly active users, from 522 to 537 million. And you can see that incremental 1 million growth in monthly active users is impressive because, again, the average revenue per user is so much more. If you think about it, $7 average revenue per user, adding 1 million users will bring you an extra $7 million in revenue, whereas adding 12 million users from the rest of the world may not approach that level as you would get from just 1 million additions in the US and Canada. And then more impressively, compared to Snap, they were able to add users while Snap was not able to add users. So given the decrease, Pinterest is now trading at a forward price to earnings of 16. This is the lowest share price or valuation this stock has traded for, according to this metric, going back all year. And I think it's a bargain. I still think it's a bargain. It's underperformed this year, which has been disappointing. But if you were to ask me, do I think Pinterest stock is a buy, hold, or a sell right now? I still think the stock is a buy. In fact, following these earnings results, I'm more bullish on Pinterest than I have been in several months now, maybe going back 4 or 5 months. Looking at these results, I'm more bullish on Pinterest compared to the current valuation. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock. And this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.